What's going on, guys? My name is Anthony with evolutiontraders.com. In this video, we're going to be going over how you personally can build a futures trading plan, right? So this is going to be very basic. This should be something that each and every single one of you guys has already done prior to taking any trades. So what I want to focus on here is people who are working with prop firms. We're going to cover some risk management. We're going to cover strategy. We're going to cover, what you should be focusing on when you're going through evaluations. Now, let's say, for example, you're going to trade futures on a personal brokerage. This plan can be utilized as well. So what we're going to be doing is, first questions first, what instrument are we going to be trading? Because when we start off, there's, all sorts of instruments that you can trade. You can trade the NQ, which is the NASDAQ 100. You can trade the ES, which is SPY. You can also trade CL, which is oil. You can trade GC, which is gold. You can trade so forth and so forth, right? You can trade US 30, or if you're on the Forex side, if you want to trade Dow. Again, which instrument are you going to trade? Because that's the chart we're going to focus on each and every single day. So for me, I like the NQ. Why do I like the NQ? Because on the option side of things, I trade big tech. So I'm already watching NVIDIA, Tesla, Apple, Microsoft, and Meta. It's very easy for me to correlate the index to the stocks that I already trade. If you want to trade the ES, that's fine. Some people think that there's less risk in the ES, but risk is all dependent on the amount of size that you're trading. We can play the same amount of risk trading the NASDAQ as the ES, right? So again, gains are going to be bigger on the NQ. Losses can be the same on either or, so it doesn't really matter. So for this video, we're going to say that we're going to trade the NQ. This is your trading. This is going to be in your trading plan. So trading NQ asset, right? So we're going to be trading the NQ asset. So this is what we're going to be focusing on. Next is, what time frame are we going to trade? Time frame could be anything from the 1 minute, right? The 1 minute all the way to the 1 day chart. Okay, so there's a big gap in between what's going on in between the 1 minute to the 1 day chart. We need to figure out, based on our own personal emotions and our tolerance and our anxiety levels, because everyone is different. Are you someone that needs to focus on a smaller time frame because you have trouble sitting through longer periods of time? If you have trouble sitting through longer periods of time, you're definitely not going to go out there and trade a 4-hour time frame chart, right? So again, think about this. For example, if you're grabbing levels from a 4-hour chart or a daily chart, you can play them and manage them on a 5-minute. You can manage them on a 15-minute. You don't have to sit through a whole day. You don't have to sit through a whole 4 hours. But if you're going to use a 4-hour chart, for example, to find specific areas of supply and demand to trade off of, you might have to sit a little bit more patient until those levels can confirm. So we need to figure out, what is the time frame that we're playing. For me personally, I'm going to build myself a trading plan. It's the 5-minute time frame. The 5-minute time frame is where I'm going to manage my trades. However, the 1 hour is where I'm going to look for my areas of supply and demand. So based on the 1 hour chart is what I'm going to look for on my supply and demand. The next thing we need to figure out is, if we're trading for a prop firm, how much drawdown do we have? What's our risk? What's our total risk, right? So say, for example, you're playing a $50,000 evaluation account. Your risk, if you're on Top Step, okay, so Top Step is going to be 2,000. If it's on Apex, it's 2,500, okay? This is our risk. This is what we're going to be using to kind of gauge how much potential loss we can take that's going to still keep us in the business. So from this, what do we want? What's comfortable, right? What's our risk tolerance? So that's the next question. What's our risk tolerance? So based on what our risk tolerance is, that's going to depend on, where do you start to feel anxiety? So if you lose a trade, or you take a few losing trades today, where do you start to feel stress? Is it $50? Is it $500? Is it $200? There's a different stress level there. So what's your risk tolerance? You need to go out and figure out what your risk tolerance is. Based on these two firms, Top Step 2,000, Apex 2,500, I would say that we don't want to risk no more than $100 to $250 a day. Okay, a day. Now, $250 is going to be a little bit more on the aggressive side. $100 is going to be a little bit more on the moderate side. Okay, a little bit more less defined risk there. Now, realistic, right? Realistic expectations. So what is our realistic expectations? If we're going to risk $100 to $250 a day, where should our realistic expectation be, right? Somewhere between $100 and $250 a day profit. Why? Because if we're looking to risk 100 to 250 a day, a 1-to-1 on that total risk is going to be the same. So we're looking to at least get a 1-to-1 R to R. If you don't know what R to R is, that just means risk to reward. If we plan on risking 100 to $250 a day, again, this is a wide gap. You need to narrow it down. Either it's 100 for you, or it's 150, or it's 200, or it's 250. Pick a number, stick to it for at least 30 days. Stick to same risk for 30 days. Okay. The same thing with profit. Stick to it for 30 days. For 30 days, right? So stick to it for 30 days. We're going to focus at least on a 1-to-1 risk to reward ratio. So again, you can see how this trading plan is starting to come together. We have what instrument we're trading, right? So we're going to trade the NQ. I could just take that off. We're going to trade the NQ. We're going to take trades only off the 5-minute time frame, but we're going to use the 1 hour to manage our supply and demand to kind of see where the bigger levels are at, right? So these are things that need to go in your trading plan. Next, we need to figure out what's our total risk. For an example, I'm just using this as an example, right? This is just an example. Let's say, for example, we're trading Top Step or Apex and we're trading a $50,000 account. Again, these numbers can be adjusted based on the firm you're trading for or based on if you're trading a personal account. So if you're trading a personal account, here's a note for you. Just use the same kind of risk management. Top Step is $2,000, $2,500. If you have anywhere between $2,000 and $2,500 in your account, you want to lose no more than what? $150 to $250 a day, guys, a day. If you want to risk this per trade, guys, then what you want to do is, if let's say, for example, you risk $100 or $250 a trade and you lose one trade at $100 to $250 a day because you're risking that much on that one individual trade, you're done trading for the day. That's a hard rule. There is no ifs, ands, or buts about it. If you sit there and you lose $150 or $200 or $250 on the day and you still continue to trade, you deserve to lose money. You deserve to have your account blown up. You need to practice risk management and you need to practice discipline. So again, we need to stay disciplined. That's something else that needs to stay in your trading plan. Discipline. You need to understand that the market is still going to be here tomorrow. The market is still going to be here next week. It's still going to be here, in a week. It's still going to be here in 3 years. The market's not going anywhere, right? Anywhere. Once you have these kind of parameters set up, now you can go to strategy, right? So what is your strategy? In your strategy, you need to have a list of things that need to happen, right? Very, very simple. I'm going to take some of this stuff off here. So if you want to screenshot this, some of the things that you need to kind of at least have on your trading plan, screenshot it now. Again, list of things that need to happen for strategy. So strategy, you are looking for XYZ to happen or X to happen. And then from there, we take our entries. So for me, 20 SMA needs to be broken. Okay, I'm just giving you guys a quick rundown on one of my strategies. The SMA needs to be broken and closed above, right? So closed above. Next candle needs to confirm highs, okay? Equals entry. Simple. Okay, simple. At least it's on my trading plan. I know when the 20 SMA needs to be broken, closed above or below if you're going long or short. Next candle needs to confirm highs. That's my entry. That's a strategy. That's it. It's a simple edge. It's a simple change in trend strategy. It's not rocket science, right? Stop loss. Okay, stop loss is close below the reason why candle. Okay, what's your reason why candle? The reason why we're taking a trade is to close over or under the 20 SMA. So our stop loss is a close below the reason why candle. Okay, no ifs, right? No ifs, buts about it. Okay, simple. That's it. Now, based on the one candle, right? The reason why candle is going to determine how many contracts we play. So example, if the reason why candle is 15 points, that means we're losing $30. We're losing $30 per one micro contract. Again, stay with micros, do not trade minis. So 15-point stop loss is an example, $30 per one micro. How many contracts do you want to take based on 15 points risk? Is it one micro, $30? Is it two? That would be 60. Is it three? That would be 90. So I'm going to give an example. 3 micro contracts, 3 micros equals a $90 stop loss. Okay. We're targeting a 1-to-1 on our trades. Yes, that means that if we get 15 points, we are going to profit $90. Remember, if we make anywhere between $100, which $90 is $100, anywhere between $100 and $250, we got to stop on the day. So let's say, for example, we take one trade and that first trade hits for 15 points. We made 90 bucks. Maybe we should just come back and trade tomorrow. That does not mean I just won my first trade. Let me go find 5 others, right? Because all you're doing is opening up the probability for you to lose the next trade and then go back to break even or even negative. So let's say, for example, we have a 40-point, right? If it can, maybe you guys can still see that. I'm going to take this off. I'm going to kind of go back here again. Let's say, for example, there's a setup. We're trading above the 20 SMA. We were trading below the 20 SMA. Now we closed above the 20 SMA. Let's say, for example, that one candle, our reason why candle that closed above the 20 SMA is 40 points. Actually, I'm going to do something like this. Let's say it's 50 points. Okay, 50 points. Many of you are looking at this and you're telling yourself, whoa, I cannot take a trade where I'm going to give up 50 points. Mind you, we're trading the NQ, guys. The NQ can move 30, 40, 50 points in 5, 10, 15 minutes, right? So again, excuse me, if we're going to give up 50 points on one particular play, does it mean that we can't enjoy the fun and we can't participate in the party? Of course not. But what it means is you need to understand that if you're going to take a trade with a potential 50-point stop loss and the trade setup is legit, understand one micro, right? One micro contract is going to equal $100 loss. So on the last example, when we were giving up 15 points, we were only going to lose potentially $30. On this one particular play, if we lose on one micro, we're going to give up $100. But also we're going to target $100 because we're going to look for 50 points. Okay. So we're going to target $100 profit. Now, here's a scenario that has happened in the past. Here's a scenario that has happened in the past. Let's say, for example, you take this particular trade and you are looking for a 1-to-1 risk to reward ratio. And let's say, for example, the trade is up 20 points. It's up 25 points. It goes up 30 points, and then it pulls back to 20 points again. You can start to see the trade stall out. You can start to see the trade not make any more money. And then let's say it goes back up to 25 points, 30 points, and then it gets rejected again. I would just take profits and call it a day. Take the 30 points. Yes, it's not a true 1-to-1, but it's also a winning trade. And what that's going to allow you to do is get out of the trade emotionally, reset yourself, and look for the next trade, right? So again, a lot of times I like to use a 1-to-1 risk to reward ratio, but sometimes if the 1-to-1 is sitting at 45 points, 50 points, 60 points, and we get a quick 20, a quick 25, a quick 30, I might consider just taking those profits, right? Again, you have to be dynamic, right? You can't just, everything just can't be robotic, right? You can't have, such a tight mechanical system to where you have, no, I need 50 points. If I don't get 50 points, I'm not going to, take my profits. Guys, trading is different each and every single day. Now, I would like to target the one-to-one. So if you're definitely playing more, let's say you're playing 2 micros, maybe you want to take some profits off at 20, 30 points and move your stop loss to break even, and then allow to see if it gets another additional 25 points for that full, 50 points take profit. Think about it, right? But that needs to be in your trading plan. It needs to be in your trading plan. So if I have multiple contracts, right? Multiple cons, sell one at 25 points, move stop loss to break even, and hold remaining con. Okay, simple. Obviously, when you're making your trading plan, you're going to make it really nice, and you're going to put like, out a nice outline on it where, it's a set of rules from the top to bottom. You're going to have things listed and numbered. I'm just kind of throwing you guys out ideas. But again, once your trading plan is complete, save it on a document, put it on your desktop, print it out, right? Print it out, put it on your wall, put it on your trading desk, and look at it each and every single morning. Before the morning starts, you want to look at it and you want to read it. Okay, here's the strategy that I'm looking to play today. This is the risk to reward that I'm looking for. This is how much I'm going to risk per trade. And when I get the setup, I'm going to take it. Also, don't cherry pick, right? Don't cherry pick. What does that mean? Don't cherry pick means if you get a setup, but you don't feel that the market can go any higher and your setup is calling for a long, you don't take the trade. You have an edge for a reason. Every single time your edge presents itself, every single time your setup gives you an entry, if you are still trading on the day, you have to take it. You have to take it. Now, when can you ignore trades? Right? When can you ignore trades? If the trend is up, right? If the trend is bullish, ignore short setups. If trend is neutral, right? Is neutral, wait for range to break, long, short. What this would mean is that you're not going to take any trades, whether your setup is giving you an indicator, whether it's long or short, if we're still in that range, okay? If trend is bearish, no longs, okay? So you can have these type of rules. Maybe you don't take any trades tomorrow because it didn't align with your strategy. But again, I would rather you not take any trades or protect yourself or limit the amount of times you're going to lose rather than taking a long setup, then getting back in short, and then taking a low of day break, and then taking a high of day break, and then coming back to an area where we bounced off of before and taking another long. You're all over the place. You can't even track if your strategy is doing well because you're just cherry picking trades left and right. The trades need to come to you. You cannot chase trades. The more you chase trades, the more you chase money, the faster money is going to run away from you. The more you're going to lose, the more you're going to be stressed, and the more you're going to continue to spin your wheels in the dirt. Guys, I hope you liked this video. If you did, like, comment, and subscribe. If you guys want to join Evolution Traders, that link is down in the description box below. I'll catch all of you guys on the next video.